So, what was said by Jerome Powell during his meeting today that caused the market to sell off? What's going on, team? It's Ricky with TechBud Solutions with a live stock market update. I hope that you guys learned something new. I do upload new videos every single day, so make sure you smash that like button and, of course, subscribe to the channel for those new daily videos. So, I'm sure a lot of you guys noticed that the overall NASDAQ markets really began to take a downturn after Jerome Powell spoke and then talked about interest rates. Interest rates are one of the biggest driving forces that has been driving the market down since early January of 2022. Last week, we saw one of the biggest rallies for overall major markets since 2020. It was progress. It was a step in the right direction. A lot of people thought that, again, we were going and really beginning to show signs of an overall recovery. And what I mean by that is the NASDAQ market has been selling off. Everyone's been anticipating and waiting for things to slowly get better. And we thought that today was just going to be a continuation of what happened last week, right? I always try to look out for the beginner trader in the sense that I don't want people to get too excited thinking that something has to happen when things can definitely get worse than anticipated. So what was said in today's meeting was that it wasn't that it was even that much worse than what was said last week, because if anything, they still talked about the overall inflation rate. They still talked about how there were those series of hikes throughout the entire year. But they just said that they might have to take a more aggressive approach in comparison to what they originally thought. And what I've become to find out about all of this, or what I've come to find out, is that it's not necessarily that there was any good news that was shared last week. I don't know if you guys remember, but I hosted a live session where Jerome Powell was having and hosting his Fed meeting, and I began to trade live depending on which way the market went. I was going to go and trade the correlating ETF, right? I took a position on TQQQ, and during that live trading session, I made like $1,700 profit. It's very easy when direction is in my favor and when the market quickly reacts. Today was quite the opposite. So if we look at when he actually began to speak, so if we look at that 1 minute time frame, we began to see a big shift of direction. There was a steady recovery, and then all of a sudden we see an aggressive drop. TQQQ makes new lows based off of recent setups. It was down about 3.5%, and then it finds its support and then begins to recover, and then right at market close, it was just the choppy day. It begins to sell off. What I began to find out is that it's not that it was horrible news. It just, what was said today was said with a specific tone that we do have to take a more aggressive approach than what originally anticipated. It wasn't that it was significantly worse. It was just slightly worse, and that's not good. And then on Thursday, if I'm not mistaken, or on Wednesday of last week when they hosted that Fed meeting, it wasn't that it was good news. I mean, we talked about the interest rate hike, right? But yet the market reacted with a bullish sentiment. So it wasn't that good news was shared, it's just no more bad news was shared, so it was less bad, right? And that's, I think, kind of the funny part, because if you actually think of what has been driving the market down, it's really three variables, right? Russia and Ukraine, inflation rate, and then interest rates. Those three factors are still all current issues, but they're kind of just factored into the market. And the reason that I'm sharing this with you is because I want you to understand why the market is reacting the way that it does. Everyone kept asking me, Ricky, like, what was said that caused the market to sell off? There was nothing really new based off of last week's Fed meeting that caused the market to go up. It's not that anything was necessarily brand new. It's just in the way that it was said, it was slightly worse than last week. I honestly think it's more of like the attitude or the intent, and then how the market reacts to it. And we quickly saw the market did not react really well to it. A lot of selling pressure. But all I also want to remind you is, like, I definitely do agree in the sense that they might have to take a more aggressive approach into the year. They have specific milestones that they're trying to target, and it's what the Feds do. That's their job. I can't blame them for it. Inflation is high, so the way that they react and the way that they've always moderated inflation is that they raise interest rates. For a quick little breakdown, when you raise interest rates, it's more expensive for people to borrow money, and that response, we expect people to then borrow less money, hopefully spend less, and then be able to mitigate that inflation rate. But you also have to ask yourself, what season are we about to enter? The summer months. What just happened? A lot of COVID restrictions are now being lifted, encouraging people to travel, other than what's going on, of course, with the lockdown in China and, of course, in Russia and Ukraine. But everything else, I mean, thinking back for the past 2.5 years, I don't feel like we've ever had such a solid setup to be able to travel to like Hawaii and not be vaccinated, right? There's still some slight restrictions, but now, to my understanding, most states are opening back up. Therefore, it makes sense that people are going to spend more. And you need to understand that these seasonal patterns, right? If they're trying to raise interest rates to mitigate that inflation rate in hopes that people begin to spend less, but yet we're about to enter a season where there's a lot of spending that is done, you can see why the Feds might react and, we're going to have to maybe take a little bit more of an aggressive approach in raising interest rates. And therefore, that is why the market reacts the way it did, especially the NASDAQ market, which has a big focus on tech. One thing that I do want to remind you is that we can always try to really be very micro focused on inflation rates and interest rates and what's going on in Russia and Ukraine. But at the end of the day, these businesses are still thriving, right? I mean, the world is still going round and round. So it is important to stay up to date with what is going on. But you need to understand that Amazon is still a killer company. Apple is still an amazing company that's still flourishing. Do you get what I mean? It's like, yes, you want to take these factors into consideration because they do influence the stocks that you're potentially invested in and or interested in investing in, but you also have to take into consideration the big picture. That it's great to take the market sentiment, the current market sentiment into consideration, but to not also cloud your overall vision of the big picture, especially if your intention is not to day trade. I know a lot of the people that have begun watching my channel are not necessarily just day traders, right? A lot of you guys have full-time jobs. You guys are, full-time students. Day trading isn't suitable for your lifestyle. So maybe that's why you're into swing trading or investing. And you need to understand, big picture, the deals are present. Facebook, if we look at Facebook and where it's at right now, Facebook offers 52% ROI if it were to recover to previous highs, right? And nearly, I would say, what is it? It's more than 50% actually. It's closer to 100%. From where we're at right now, if it were to offer a full recovery, 82%. But let's not talk about Facebook. Facebook is a different story, right? Let's talk about Amazon. Even Amazon. It's recovered quite a bit, but even if it pulls on back, right, from where we're at right now, and if it makes a full recovery, do you expect Amazon going anywhere? No. It's like the world is still going around. These businesses are still doing really well. The market is simply reacting, as in these publicly traded companies are just reacting to what is going on and what might affect them for the short term. A lot of these companies borrow money. So therefore, if interest rates go up, it's going to be a little bit more expensive. It's going to eat up into their margin. That's why they react the way that they do. But again, understand the big picture if your intention is not to day trade. Worry about those day trading concerns for us intraday traders, right? But if you're a swing trader, if you're a long-term investor, I want to reassure you that it's like, think big. Think big picture. You don't have to make impulsive decisions or panic sell at the first news article of, oh my God, they're raising interest rates, markets are going to crash. It's good to take that into consideration, to digest it, but to also ask yourself, what's your intention? If you don't plan to sell anytime soon, then again, I would load up on these deals. Can they get worse? Of course, they can definitely get worse, right? But can they get better? Of course, right? I mean, these companies are thriving, and yes, they are being negatively affected in some form of way, but it's not detrimental to the overall company. So one thing that I did want to quickly talk about are oil prices. So when asking the question, what is going up when the market is going down right now? Right now, oil prices are killing it. I checked out the United States Oil Fund. It's been very popular lately, and this is on the overall day chart. I'm actually going to pull it up here. Let me see if I can. Here we go. So on the day chart, we can see that it's very, very bullish, very, very overbought. I don't know if I would encourage anyone to swing trade something like this. If you want to take on that risk, that's up to you. But even intraday on the 1 day, 1 minute chart, on the day alone, it gained up 6% intraday and another 1% after market hours. Think about that. That's great intraday potential, right? Oil right now, after market hours, crude oil, WTI, they're all up. They're in the green. They're in the money. So if you're asking the question, what is bullish right now as the market is kind of choppy? oil is bullish right now. It's overbought, but it's definitely bullish. So make sure you take that into consideration. One of the last things that I quickly want to talk about is the NASDAQ market is down 0.5%, almost 0.5%. That means if the NASDAQ market were to open up right now, TQQQ would be down about 1.5%. SQQQ would be up about 1.5%. So please understand that correlation. It's something that I'm very excited to talk about within our live trading session tomorrow at Market Open, and I'd love to have you join us. So again, if you guys want to be able to watch me trade live, I trade live every single morning at Market Open, exclusive to my Learn Plan Profit group. If you want to learn a little bit more about it, you don't have to, but if you want to learn more about it to see if it's a good fit for you, click the second link in the description and see if the Learn Plan Profit group is a good fit for you. Like always, continue working hard, continue following dreams, let your passion be what drives your success. I hope that you guys appreciate this live stock market update. Hope that you can consider dropping the thumbs up, subscribing to the channel, and of course, ending the year on a green note. Take it easy, team.